Coming up in today's video, gold and silver had a monster crash here today. Silver at one point being down 10% on the day. US yields and the US dollar traded higher today, with the dollar index hitting that $99.5 handle that I talked about yesterday. And the stock market is holding on for dear life. It does not want to give way. You can see another V-shaped recovery happening just like it was yesterday. And the culprit behind the whole thing, oil tagged that $78 handle but is now retreating off what could be this level of resistance. Everyone, welcome to another market recap. My name is Alan Perez, and in this video I'll be sharing my trade setups, current trade ideas, and how I plan to navigate this market. Like always, I'm just a random guy on YouTube sharing my thoughts and opinions. This market is super crazy, so let's go ahead and navigate it together. So without further ado, let's get right into it. Just like yesterday, let's go ahead and start off with US oil. We had a crazy flare up here today and actually made a story about it here on the Telegram channel. For those that don't know, every single day I go ahead and post the two most imperative chart markups of the day, and in this case oil and gold were the two that I posted. But let's go ahead and talk about oil and why it had this leg higher. Yesterday I did go ahead and say that we would need something fresh and new to go ahead and make new all-time highs or new recent highs, and we actually got that. So I was wrong. I thought that we were going to be bouncing around, actually doing a little bit of mean reverting and just range bound action, but something new happened. Aramco halted operations in Saudi Arabia's biggest oil refinery. You can see that it happened after a drone strike and debris from another intercepted drone triggered a major fire at the UAE's, can't pronounce it, oil hub. They did go ahead and proceed operations at that major oil hub, but that action in itself is a major risk for oil supply. Also, the Strait of Hormuz is not officially closed, but things are still halting. Insurance premiums are crazy high. Daily rates for those super tankers are crazy high as well. So even though it's not officially closed, there's a lot less movement in that area, a lot less oil going back and forth. And the idea that this can be a prolonged situation, go ahead and added another risk premium onto the already high price of oil. So at the moment, you can see US oil here went ahead and went up to that $78 handle, and it's now a little bit fading off here, but it's still green on the day. We're gonna see how this develops here. If you get a flush below here, then of course the dollar index will go ahead and fall with that, but there is a possible chance that if things continue to escalate, you will definitely see another pop higher. And some analysts have say oil to $100, $120 a barrel, which is crazy high. Here's a fun fact for you: for every $10 of oil, that's 20 basis points added to CPI, and if that happens for an extended period of time, that will definitely push back any Fed rate cuts, and of course that can create a trickle effect. Looking at yields here today, the US 10-year yield did go ahead and continue increasing more than it did yesterday here. Now it's giving back a little bit of its gains here, but nonetheless it is still higher on the day. Dollar index went ahead and hit that 99.5 handle, actually a little bit above that, and is now retracing just a little bit here. The question is going to be, is this going to be a fade move, or are we going to just have a quick pullback and continue higher? My opinion is a little bit of both, actually. So I do think that this next level of resistance that we touched on today here was an opportunity for the bulls and the bears to go ahead and take action and fight it out, right? I think that right now, for the time being, you will have some kind of a pullback here. Now if it continues back to that $98 handle, then perhaps you are getting the bears winning the opportunity. But if you see that the dollar index continues to go ahead and chug higher here, let's go ahead and put a fib on here. Let's say that it bounces right off of this level here. I like this level from a technical perspective here. You can see this little cluster. This is that 50% retracement level here, that 50 to 61.8. If you see the dollar index retreat into this level and bounce higher, then this is just another pullback and the momentum continues on. What I would like to do in that case is continue shorting the euro dollar. So yesterday I took my profit on euro dollar. It hit this 1.1600 level, and now I am looking for an opportunity to re-enter the market short on euro dollar, basically going long the dollar. Of course, if this macro landscape is still the same. What that would look like on the euro dollar is, again, this little cluster of candles here, a pullback right into that 50 to 61.8% retracement level and trade it back lower. I'm even open to doing a more shallow pullback all the way up into the 38.2 and then take it lower there. As long as tensions are high, I do expect for this move to continue on lower, especially considering that the edge finder is showing a bearish reading on the euro dollar here, -6 reading. So as long as you have the technicals, the sentiment, and the fundamentals lining up, that is the perfect trade, and I'm definitely willing to go ahead and take another round at this. Now let's say you want to go ahead and fade this move, because it's very important that you're prepared for either scenario. If you see bears take over this dollar rally here and it sustains itself, I'm willing to do two things. I'm willing to go go long Aussie dollar and short dollar yen. Here's why. This level right here was that breakout for the RBA. They were willing to go ahead and hike the rates as they got hot CPI prints. Taking all of the geopolitics away, the RBA is looking to raise their interest rate while the Fed is looking to ease their interest rates. So assuming that once this is all behind us, that dynamic continues to go ahead and continue, Aussie dollar long is a fantastic trade. You can see here on the interest rate projections page here for the Edge Finder, the Aussie dollar in blue and the US dollar in red. The divergence between the Aussie and the US interest rate is going to continue to widen, and that will only help this trade. My second option will go ahead and be dollar yen here to the short side. We are getting a bid up here on the dollar yen, now approaching that 160 to 159 handle here that I think could be defended by the Bank of Japan. The Bank of Japan has said recently that they're monitoring the economic conditions of the world, but they're still looking to go ahead and achieve their objective of hiking interest rates. That and the fact that they're willing to intervene if the yen continues to depreciate tells me that the higher we get on the dollar yen, the more likely it is that they will go ahead and defend and intervene that depreciation. Again, looking at the interest rate projections page on the Edge Finder, you can see that in blue the US and the Japanese yen in red, the spread between the two interest rates are expected to narrow the more down you go, going up into Q4 of 2026, making that carry trade a lot less attractive and hopefully pushing dollar yen lower. We'll go ahead and touch on gold here. The reason why that big fall today is again, of course, the US dollar and that higher yield story. Again, yes, gold is a traditional safe haven. However, these higher yields is pushing up the dollar, and that dollar is capping gold upside for now. In my opinion, I think gold still has a lot of upside potential. If you start to see that dollar fade off a little bit, then of course gold will go ahead and recover a little bit. You can see here right now, as of time of recording, gold is having a little bit of a bounce here on that support level. At the moment, gold is getting a 4 neutral reading on the Edge Finder, just shy of a bullish reading of 5. However, if you see that bullish reading tick up higher here alongside a weaker dollar, I think gold could be in play again. So for now, if I want to continue with this trade, this momentum to the downside, of course I will need to continue seeing these escalations being happening. If then if I can get that 38.2% retracement or that 50% retracement there on euro dollar, then I will go ahead and trade it to the downside. However, if I see things start to fall off and settle down a little bit, and you see the dollar really start to taper off here, then I would look to fade the move by going short dollar yen. I think that's a good level here. From a technical perspective, we're pretty much back at these intervention levels here. I think the risk reward is there. You just need to go ahead and trade it with very, very low size and wide stops. And that's it for today, guys. Thank you guys so much for watching. Of course, leave a comment. I would love to know what you think about this current market. Maybe you can share some trade ideas that I can go ahead and look at for the next video. And like always, have a blessed rest of your day and trade safely. Bye-bye.